Hello friends, welcome to our channel StoxFactor. Hope you are doing well. In this weekly market analysis video, we are going to look at the important factors which has led to the fall in Nifty so far, and we'll look at the importance levels for the next week for the index. So let's quickly begin with our analysis. So as we all know that we have seen the relentless selling in the market last week also, which was very much in line with the week before that. And now let's see what are the main important factors which has led to the selling in the market. So if you have already watched our previous video, so we discussed those important factors and those factors are still the same. The most important factor now is the crude oil price. And why the crude oil price is rising? It is because of the geopolitical tensions, because Russia is the major exporter of the oil, and the war between Ukraine and Russia has really affected the supply chain, due to which the oil prices are rising. That is, the crude oil prices are rising like anything, and this has led to the risk of inflation. So that is the reason that we are seeing relentless selling in the market from the FIIs. So the main selling is done by the FIIs, and that also in the index heavyweight stocks. Now coming to the another important factor, which is the US inflation data, which we already saw last week also, and the US jobs data, which again came last week, and again the numbers were good. The unemployment rate has fallen down, due to which again we can anticipate that there will be more interest rate hikes. But now, though we have seen good unemployment numbers, that the unemployment numbers are improving in US and more jobs are being posted, but the fact which we cannot ignore is that due to this supply chain issue of crude oil and the recent tension going on, the Fed may take a pause to increase the interest rate, not at that rate which was expected earlier, but maybe it can slow down the increase in the rate. Maybe instead of doing 4 rate hikes this year, it can do only 2 to 3 rate hikes this year. But this is already very much discounted in the market. So friends, let's first go to the dashboard now and let's quickly begin with our analysis. So these were the important factors which we discussed. Now let's go to the dashboard and we'll start with the macro indicators. So we have already provided all the macro indicators which will help you to gauge the market sentiments and which can affect the Indian markets. So we really recommend our users to go through this macro indicators page, not maybe on daily basis, but at least twice or thrice in a weekly basis, so as to understand the reason behind the selling, or why and how the Nifty is correlated to these macro indicators like US dollar index, FIIs inflow, crude oil, and the gold price. So let's quickly dissect these data points. So we can see that there is a very good correlation that as soon as the dollar has started rising, we have seen fall in the Nifty. So FIIs are pulling money from the Indian markets and they are putting back money in the US markets. And this is very much correlated with the fact here also that you can see FIIs inflow, that is, it is in negative. It means they have taken money from the Indian markets, which is very much correlated with the US dollar index. Again, we can see the same correlation, the USD INR correlation. So we can see the rupee has fallen, and that too has led to the fall in Indian markets. Similarly, you can see a huge jump in crude oil, which has again led to the correlation. So this is a negative correlation, perfect negative correlation we can see here. So these are the important factors, macro indicators, which has affected the Indian markets. And on the bottom table, we can also see that there is a constant increase in the gold price since the attack on Ukraine has begun. So it means the people are parking money into the safe haven, that is the gold. So now that we have understood the macro indicators, now let's quickly go to the FII's data and try to understand what they are trying to do. So first of all, we look at the bigger picture and we look at the cash market data of FIIs. We'll first analyze the monthly data. We have seen relentless selling from FIIs since April. They did slight buying in September, but after that you have seen huge selling by FIIs, and so far in March just 5 days have passed. It means only 3 trading days, and already they have sold around 18,000 crores. Now friends, let's quickly correlate this data with the Nifty chart also. So we have already drawn the important levels. So first we'll look at some important key points. So as you can see here, that Nifty consolidated during the tenure of June and July. So these 2 months, there was a very tight consolidation in Nifty, right? And now if we see that FIIs were doing the buying till March, and after that they have turned net sellers. But you can see here, while they were selling in small quantities, DIIs were buying, and DIIs were buying more as to what FIIs were selling. And during this period, you can see there was a very tight consolidation. And after that, we haven't seen any FIIs buying. So the support has been provided by DIIs only, but the frequency of DIIs buying was less than as compared to the cash selling by the FIIs. So that's why we have seen fall in Nifty. So whatever this price rise was, so as you can see, so this whole buying after this level, so this whole buying was done by DIIs and retail people. So FIIs were net sellers and now they have become more sellers as compared to what DIIs are buying. During this tenure, DIIs were buying relentlessly and FIIs were selling. That's why we have seen the huge rise in the market, and after that we have seen continuous selling because now FII is selling relentlessly. So what does it mean? So it means that till this point FIIs have done the buying, right? So after this level they are in huge profit. So up to this level they are not in loss. It means up to here, if the market comes here, they will be net to net. They have already booked huge profits by this selling. They have already booked the profit from these levels, and again when the market bounced they again started selling and they are booking their profits. So up to this level they are safe. So market is unlikely to go below this level unless something very bad happens, but the chances are low. So up to this level, so that is around 16,000, we can expect the some amount of buying coming, and we have seen multiple supports that market has taken support around this level, except the last trading day where we saw huge selling, but the market still bounced from the 16,100 levels. But this level is very important to watch. So again, if we see relentless selling from FIIs or some new news comes about the war, so there a slight dip can come, but the chances that dip will be bought from this level. So this is the important level to watch. If this level breaks, then again fresh selling can happen and it can take the market up to more low levels, right? Up to 15,000 levels. But this will be a very important level to watch here. We can expect some amount of buying coming at these odd levels, around 16,000 odd levels. Now you can see that Nifty is already below 200 EMA. So this now will act as a resistance. So you can see around 16,700 odd levels. That's why we have seen huge selling coming at this level. So when the market went above this particular level, immediately the selling came, right? So this is the important level to watch. Again, that can also be seen the horizontal line. So this is very much coincided with the 200 EMA. So we can see the horizontal line that there were multiple support levels and this has broken and now this has turned as the resistance. So as soon as the market has bounced to this level, we have seen the selling coming. So now what we can expect is we have drawn this line to extend. We can see some support provided by this line also, plus some support level coming at this level also, because some consolidation happened here also. So we can expect some amount of buying coming at this level, provided there is no news coming about the war, that the situation doesn't worsen and we see some positive good news developments regarding the talks between Ukraine and Russia. So in that case, there might be some consolidation and we can expect a bounce. Now let us also see FII's derivatives data, which will give us a more clear picture towards the near term trend, right? So let's quickly analyze. As we can see on the last trading day, they were already net sellers in the calls, in the puts and in the futures. Now let's look at the future index long ratio. It is still below 50. It means, as we can see, they are holding net short positions on index. But one interesting pattern to see here is, as soon as they have turned the net short positions in future index, that is the on Nifty and Bank Nifty both, but they have been continuously buying stock futures. You can see continuously they are accumulating stock futures. So it means what they are trying to do, they are selling in the cash market, they are bringing the market down and they are accumulating future stocks at lower levels. And we have seen this increase continuously. So this is one interesting pattern to note. So if this continues, it means we can expect the buying coming in the cash market and they will book their profits in these future positions, because now FIIs are holding huge future positions in the stocks, right? Not on the index, in the stocks. And this gives us a slight signal that anytime soon they can turn net buyers in the cash market in order to get benefited from this stock future long positions, right? So this is one important level to watch. You have to watch this data point and let's see whether this pattern continues for a couple of days in the next week also. Now friends, let's quickly jump at the index analysis page and let's quickly look at the Nifty levels for the next week. So we can see here major support that is coming at 16,000 and major resistance is at 17,500. But we will also look at the intermediate resistance data points and the support data points based on the option chain. We can see continuously PCR level falling with the market price. So it means that calls are being sold more as compared to the puts. Now let's quickly look at the option chain. So first of all, we can see that there is a slight straddle which is being played out at 16,500, though the number of puts are more as compared to the number of calls. And we can see the first level support and the major support which is coming at 16,000. So now if we look at the premium of 16,000, so far 16,000 will act as a major support, and we can see the 16,000 put price is 155, the weekly option price. So 16,000 minus 155, so around 15,850 levels. So if the market on intraday takes a dip near 15,900, so that will be a good opportunity to buy, putting a stop loss below 15,850. So this will be our strategy if you want to take a position on the long side. Plus, if the market bounces above 16,500 levels, again we can make a position on the short side. So if we look at the premium of 16,500 call option, so you can see here, let us hover and let us see 16,500 call option. So you can see 128. So 16,500 plus 128, that is around 130. So around 16,650, right? So if we take a 150 point broader range, so 16,650 resistance is likely to come. So means above 60,600 the resistance is likely to come, and we can make a short positions. Either we can buy puts or we can short by putting a strict stop loss above 16,700. So this can be a strategy for option buyers or sellers, right? So in this way you can plan your trades and putting a strict stop loss. So we have to put a strict stop loss, or either we have to hedge our positions by taking a counter trade. So this is the way you have to hedge whatever positions you are taking. Try to manage your risk also. With this we come to the end of this analysis. Hope you liked the video and the rationale behind those data points. If you have any questions related to this video, please post your questions on the comment section and we will definitely answer your questions. And if you have not subscribed to our channel till now, please subscribe to our channel so that you can get the notifications of such videos in which we talk about the important data points related to stocks or index, and we provide the learning on how to read the data points in order to identify high probability trades. And if you want to get the access of our dashboard, please visit our website www.stocksfactor.com. We have provided the details of subscription plans as you can see here. See you in another video. Take care and goodbye.